So welcome back to Wally's Financial 101. Today I got again with us guest speaker Alexander. We're going to be touching on all the different types of term policies, because I know in my last video I went over the types of life insurance. So with term policies, you have different types of term policies, and that is what we're going to be covering today. So I'll just start off with decreasing term. So to my knowledge, decreasing term has an annual decreasing face amount over time with level premiums.
Yes.
Typically, we offer decreasing term with people who are more prioritized on covering their mortgages.
Exactly.
What would you like to add in on that?
Yeah, it's just mortgage protection. So making sure that when they're decreasing their payments, then still, if something was to happen to them, they have some coverage to cover that decreased amount that they've been paying over time through their mortgage. So
Okay.
yeah.
That one. And then after decreasing term, you have term with living benefits, because term didn't always have living benefits, did it?
No, it does not.
Exactly.
Normally
So
just paying a premium.
exactly.
Yeah.
So with today's updates and new revisions to policies, they've implemented term with living benefits. So now you're able to acquire term policies that give you that living benefit perk that you didn't used to have.
Exactly. And all that means really is the fact that instead of the main purpose that insurance was at the beginning was that you were only able to dip inside of your death benefit when you were to perish.
Mm-hmm.
Now that what they've done is they've upgraded the policies to use if you were to have any health issues. So they have it in categories: terminal, chronic, and critical. With those different illnesses that they then qualify you for, that will then help you dip into those that death benefit to use while living. So they'll give you a percentage of that money from the death benefit.
Okay.
Mm-hmm.
So then we also have convertible term, which I would say this is one of my favorite, because I feel like convertible term is more, I wouldn't say more so, but I feel like convertible term is good for people who are in that I don't need it, or I don't think I'll qualify.
Yes.
Convertible term is to acquire that low premium just to get yourself into a policy, because now that you've acquired a convertible term, whenever you do feel like you're able or qualified to then start getting yourself a whole life or even a permanent policy, because you have a convertible term, your term can now convert into a permanent policy. Yes. So I like convertible term because that's just getting your foot in the door.
Yes.
If you don't even acquire a convertible term and you wait till after you're 50, it's just going to be 10 times harder for you to solidify a policy.
Correct. Exactly. And the beauty of convertible as well is that you now, because you have already had done your medical exam and like done everything to be accepted by the term policy, if you were to upgrade to a whole life or even an indexed account, at that point you can do that without having to do a medical again. You already have a policy in place, and all the plan sees is now you're just wanting to upgrade it. So that's another perk that you receive from having a convertible term.
Okay.
Mm-hmm.
So what about temporary terms? What would you say are the main use for temporary terms?
Temporary term is just to ensure that you're covered. Like, it just covers your money, because again, with temporary term, there's no like living benefits that is provided. It's just if you were to perish, that's when the death benefit is paying out to your family. So what I would say that the benefit is with temporary term is that it ensures that if a lost income was to come in place because of you perishing, now your family is receiving money to replace your income.
Okay.
So that would be a benefit of why, temporary term is good. And our company is actually have bumped up. They now provide us to where we could do 40-year terms, where the most that has ever been done for term was 35. So
okay. So like you said, the most you could ever get in term is 35. But even with that 35, that's with select companies.
Correct.
Majority companies is only 30.
Yes.
But like he just said, now what we do, we have access to offer our clients 35-year terms, 40-year terms, which no one would have thought would have been possible.
No.
But with how we're advancing and how we're growing, we're now capable of offering 40-year terms.
Yes.
So I just feel like that is like a blessing, because who plans on dying in 30 years?
Yeah.
No one. I mean, it might be an accident, but guess what? Who plans on dying in 40 years?
Facts.
That's more accurate. Like,
No, true.
so if you were to get a term policy at 30 years old, it will be active until you're 70.
Wow, yeah, see?
The average death rate is 70.
Yeah.
Right there, perfect. 40 years.
Yeah, 100%.
So then
Leaves more wiggle room to then. Now we can work with clients that are not only at the older age. Typically, we try and suggest that to individuals who's 40 or plus, right? But like now we're able to now dive into the younger ages because it provides more protection over the years. So
then we also have adjustable term, which, what would you say, how would you say adjustable term works?
So adjustable term is just another way of saying it's flexible. So it has the flexibility of now you're adjusting the amount that you're paying, and you're adjusting the premium levels the face amounts that you're wanting to either increase or decrease.
Okay.
So that's where you can adjust those amounts for yourself. If you say you can't pay, let's just say your policy is $50, you can't pay that no more. Okay, I want to lower it to 30 and then lower my face amount as well. Well, then you have that option to do so.
And that's with adjustable term.
That's with adjustable term.
Okay. And one of my other favorites is term with return of premium.
Now this one.
Who doesn't want to be guaranteed their money back?
Who doesn't want that, right?
So for people who don't like term because they're like, it doesn't have living benefits, or because they feel like they're going to outlive it, we offer them term with living benefits. I mean, term with rate of return of premium. See, it's just so good, got me stuttering. But return of premium just means if you have a 25-year, 20, 30, 35-year term, when it finally matures and expires and it's cut off, all that money that you put into that term for those amount of years, you get right back. And get this, if you had a return of premium with your term as well as a convertible term, when you finally convert your term to a whole life or even upgrade to an IUL, you now have the funds from your return of premium to now pay for your upgraded policy. Meaning that you are not going to come out of pocket nothing, because you already came out of pocket by putting away into your term for the last 20, 30 years.
Exactly.
And that is why I love return of premium.
Yeah, I would agree. And this is not really a focus, just to be very transparent. It's not really a focus of the coverage at this point. It's more the focus of getting your premiums back, right? Because again, they're not going to give you that much in your face amounts because they know you're going to get a return from your premiums. So when someone who is like looking at account that is to upgrade, but they don't have the funds to do that, then we can also refer them to these return of premium accounts, where it provides them that ability to still have something that is being saved over the years
while having a decent face amount. You don't have an exaggerated face amount, you have a decent face amount with a guaranteed return.
Exactly. And so we want to make sure that, because we always suggest that you have 10 times what your income is for coverage. You want to always have that as your, because if anything was to happen to you, at least your family is giving money back to replace the income that has been lost. So it's great that you got that ability to choose and have options on how you want to either save your money, protect your money, or even grow your money. So you got a bunch of options.
So yeah, and I hope this video was very informative, because there isn't just one term policy, there isn't just one whole life policy. And in my next video, I will be going over the different types of whole life policies. But life insurance is so spread out and diverse that there are policies for everybody.
Exactly.
You just have to find and acquire the right policy for yourself. And that is where we're trying to help the community learn these things and come out of their shell and try to acquire more things that will benefit your family in the long run.
Exactly. Right.
So
It's okay.
thanks for tuning in today. It's a great day to elevate, and I hope you elevate somehow from this video.
Yes.
And thanks for joining us again today.
Yeah. Thank you for having me.
So, ciao.